All right, all right, all right. Who got fucked up last night at the club? I did. Come on, clicker. All right, back. All right. Some of y'all in here are fucking pussies. Y'all know who you are. You thought you had a little good bull market, bought some coins, bought some dog with hat, maybe bought some, I don't know, some other dog shit meme coins that you have in your portfolio, made a few X's, cashed out, and now like, what the fuck, where's this bull market at? And we're just getting started. And I get a little bit upset when I'm on social media and I see people who are hemming and hawing about like, oh, I think Bitcoin's only go to like 100,000 or some bullshit like that. So I wanted to bring it back to a little bit more degen and talk about the left curve and why some of you motherfuckers in here are not bullish enough. So if you're not familiar with the meme, some of you over here in the mid curve doing that fucking, I don't know, 60-40 bullshit. I'm over here, Neanderthal in this shit. So let's just clarify why we're here, what took us from $16,000 in Bitcoin after two demand Sam Bankman-Fried crashed the market in November till 64, whatever the thousand it is right now, and re-energize ourselves as to the meta-narrative that's driving this whole situation and why we're not stopping at 70,000 or even 100,000. Obviously, I'm out there on Twitter saying a million. Maybe it gets there, maybe it doesn't, whatever. But we need to re-believe in what we're actually doing here and what is driving this market. And so that's the purpose of this presentation. And hopefully you leave this not being like this motherfucker in the middle. So a little bit of economics here. Again, another thing that pisses me off when I'm on social media listening to people talk about economics, especially some of the idiots who run central banks and whatnot, is they talk about the real yield. And if you're in economics, there's a lot of presentations, R-star, all this gobbledygook they teach you in university. And like, we can't really measure real yield. What is the real yield? And we think real yields are positive. Now, I have my own belief that the real yield is essentially the 10-year government bond yield minus nominal GDP growth. And very simply, if you as an investor are lending money to a government in a particular jurisdiction, you should at least be compensated by the nominal growth of that economy. It only makes sense. Let's say that a particular government wants to build a hydroelectric dam or some other piece of large-scale infrastructure, and they don't want to tax the population to pay for it. They have a functioning government bond market, and they're going to entice citizens and entities to to lend to them. And so what should the rate of return be? Well, at a very high level, it should be, what is the economy going to benefit from this thing that I'm spending money on? And surely as an investor in these bonds, I should be getting paid at least the growth of the economy. So that's how I define the real yield, and it's very easy to measure. Most economies publish a nominal GDP number every quarter, and then 10-year government bond yields are the most liquid assets in the world, especially the US Treasuries. And I'll talk a little bit more about the US in particular in the rest of this presentation. So at a very high level, the positive real yield means that the investor is earning more than the growth of whatever the government is generating. So they're earning a profit. If the real yield is negative, then the government is earning a profit at the expense of the people who are lending to them. Now, obviously, if you're a politician or a government, you want to borrow at a negative real yielding rate, which makes sense, especially in today's day and age, and whether you're in a democracy or some other form of system, politicians globally are giving out free shit to get you to vote for them or to get you to support them. Now, they don't want to tax people for this free shit. They want to say, oh yeah, we're just going to borrow some more money and we're going to reward this particular subset of the populace with something that they desire. And so if possible, politicians would love that, hey, if the economy is growing at 10%, and I'm getting credit for that as a politician, I'm getting reelected on this growth, but I can borrow at 5%, let's say, then there's no incentive for me to stop borrowing as much as I can because I'm actually earning a profit as the government because real yields are negative. So in essence, as long as real yields are negative, there's no incentive for any government to stop borrowing large amounts of money. Now, obviously, this is unnatural. It's natural to think that as an investor in a government bond, I should get paid at least the rate of return for the growth of the economy. So how do these politicians globally financially repress everyone and get them to buy negative real yielding debt in the trillions and trillions of dollars that are outstanding today? So the first and most common way that people do this is they use the banking system. So in many countries, probably up until most recently, you can't invest in many things as a depositor. The bank says, hey, here's 2 or 3 or 4%, whatever it is. Meanwhile, the economy is growing at 20% per annum. That's essentially the model that China, Japan, South Korea, Taiwan, all the Asian tigers have implemented since World War II, Japan being the most successful. These economies have grown at 5+% nominal GDP growth for many, many years, but you would be hard-pressed as somebody depositing in a bank account to get that rate. And so they're repressing you because you don't have any other options. Your money's in the bank, you think the bank is safe, but you're not getting the rate of return of the economy itself. Now, a little bit more draconian is you invoke capital controls, where you say, hey, you're a saver, and you're like, I don't like this. I'm getting a fucking bad deal here. I'm getting 2%, the economy is growing at 10. Can I move my money somewhere else so that I can get a better return on my money? And in many cases, the answer is no. Your money is stuck in the banking system or a particular equity market, and you don't have very many options. And so that's been the state of the world for a very, very long time. That's on the financial repression side. Obviously, as we've gotten more hip to this situation, people have started to push back on this and aren't really happy if there's capital controls or they don't have the ability to invest their money where they would like into higher yielding instruments, either within the country, outside the banking system, or outside of a particular jurisdiction. So we have central banks. Obviously the Federal Reserve in the US being the most important, and I tend to look at the People's Bank of China, the European Central Bank, and the Bank of Japan as the 4 main central banks out there. What are they all doing? They're all employing some form of quantitative easing, which is a fancy word for money printing. These entities have the ability to print base currency, and what do they do with that? They buy government bonds. What is the purpose of buying government bonds? To push down their yield so that it's more affordable for people to borrow. Now, who's the most important borrower in the world? Their respective government. So while they might say that they're an independent organization aimed at financial stability and maintaining the purchasing power of their respective piece of fiat trash, what they're really there to do is to make sure that their domestic government is properly funded. And if there ever becomes a situation where the government can't afford its debt load, they'll push rates negative by engaging in quantitative easing and buying bonds. So that's all the theory. Let's look at 2009 up until the president in terms of what's happened in the United States. Now, obviously, it's a big world out there. The reason why I focus on the US, it's the empire. Its financial system controls most of the world, and most financial systems are derivative or derive their value and their policies from what the Fed and the US monetary situation is. So let's focus a bit on the US. So here's a handy chart. I'll publish this on Twitter later. I have a Bloomberg custom index where I basically track the 10-year US Treasury yield minus the published nominal GDP growth year on year every quarter. And so what we have here, this is a chart from 2009 to the present. Why did I start in 2009? Well, Lord Satoshi gifted us the Bitcoin Genesis block in 2009. And obviously, we're going to be focusing on crypto in a bit, so I wanted to start in 2009 as the starting point. So what do we see here? There are 2 main periods of massively positive real interest rates, which corresponded with deflationary events. Number 1, the 2008 global financial crisis. The second is COVID. Apart from those 2 situations, real yields have been negative. The orange or yellow line, probably should make this a bit thicker, is the Federal Reserve's balance sheet. So as we see, real yields are negative. Why are they negative? Because the Fed has grown its balance sheet from about $2 trillion post the crisis to, I think, at a height of almost 9 trillion during the COVID years. And as we see, the real yields have stayed negative as they've been consistently printing money to buy bonds and reduce the yields of the 10-year rate, which means that we as investors in the most liquid debt security in the world are getting a raw deal. Next, why do we want to have negative real yields as a government? Again, because we want to spend money. Now, I've plotted the US real yield against another line, which is the US federal budget deficit. And as you can see, it's a negative number. The US has been able to finance itself at a profitably negative real yield ever since 2009. So obviously, we're here for crypto. What can we do about this? Is there a way that we can earn a positive real yield on our savings? How can we escape financial repression? Is there a way to opt out of the fiat financial system and make sure that we at least grow our wealth at the same way that the global economy is growing? So obviously, for the past 5,000 or 10,000 years, we've had gold. And gold has performed its role very well. I know a lot of people say it doesn't have a yield and blah, blah, blah. But over time, gold has kept its value because we believe it to have value. The problem with gold, it's very heavy. Try moving, I don't know, $1 million, $1 billion worth of gold. It's hard. You've got to have probably an armed guard help you move your gold somewhere, which means it's very easy for somebody to steal it from you. They know you have the gold. It's heavy. You have to move it somewhere. It's fucking gold. You can see it. It's easy for a government to take it from you. And they've done this repeatedly over time. Obviously, a very good example during World War II in 1933, US President Franklin Delano Roosevelt, over one weekend said US people are no longer allowed to privately hold gold. That was not reversed until 1974, in which time the gold price went from $20 before around 1933 to somewhere around a few $100s in the 70s. So you can see how the depreciation of the dollar over gold, while the average person was not able to own it. Now, obviously, we're here for a crypto conference. We are here because Lord Satoshi has gifted us the Bitcoin blockchain. Why is Bitcoin so great? Because it's weightless. Whether I have 1 Satoshi or I have 1 million Bitcoin, whatever that's worth in fiat terms or energy terms, it weighs the same amount of nothing. And I can store my Bitcoin in my head. If I remember my seed phrase or my private key, then I have access to my wealth whenever I want it. And most importantly, no one can prove that I have control of this Bitcoin unless I sign a transaction in that instant, which means that no one can steal it from me just by looking at me. You might make an assumption that maybe this guy has a lot of Bitcoin, or maybe they don't, but you can't actually demonstratively prove that unless I physically sign a transaction in front of you. And that's very, very important versus gold where it's there, I see it, I can take it from you. So here's the same chart again, and the Bitcoin price is on a log scale. And one of the most amazing things about the price of Bitcoin over time is it's moved in a nonlinear fashion on a logarithmic scale. And obviously, it's probably one of the best performing assets in human history, as essentially what has happened. We have the largest empire, most powerful empire in human history, which is printing money to fund government spending. And finally, we found a little small door called Bitcoin, and we're shoveling as much fiat as we can into this ecosystem, and obviously, the price has gone up massively. Here is Bitcoin versus gold. This is an index at 100, started in 2009. Bitcoin's at like 88 million, and gold's at like 266. So obviously, Bitcoin in this digital world that we live in has performed very, very well for those who have gotten in the game and out of the fiat system. So that's the past. That gets you from 16,000 to 64,000. But we're trading markets. Markets are about what do we think the future is going to hold. Is the situation from 2009 until the present going to be repeated from now until 2030? I'd say it's going to get even worse. And it's not me saying this. This is supposedly the nonpartisan arm of the US government telling us that they foresee a 6% deficit from now until the next decade. Of course, why would the government stop spending money? They're doing it at a negative real yield. they're not going to stop until the rates are punishingly high, that investors are getting paid more than the growth that's being generated. And so they're incentivized to continue to spend to get reelected. And that's what this chart is telling us, that what got us from a few cents of Bitcoin to 70,000, that trend is going to continue, and it's going to get even worse. And this is another thing that I think people need to wrap their heads around, especially when you're thinking about US growth, or any growth in sort of a Western democratic system, is that, I live most of my life in Greater China, and in Greater China, GDP growth is a political variable. Every year, the Politburo sits down and they decide, how much growth are we going to create on paper? How do they do it? They just print more money and allow more debt to be created to generate the economic activity. And that is where we have gotten to in the United States and other Western governments. They need to get reelected. If you do not, let me forward here. This is a great chart from BCA Research. And it basically shows that a sitting US president has a 67% chance of reelection. If you have a recession in the year in which you are running for reelection, you go from a 67% chance of reelection to a 33% chance of reelection. So what the fuck are you supposed to do? Print the money, hand out the goodies, and generate the growth. Otherwise, you get booted from office. Which is why you have a 22% federal deficit spending. GDP is a political variable. The US administration can create whatever GDP growth they want as long as they're willing to spend the money. And they can keep spending the money because real yields are negative. So this is why I believe that real yields will stay negative from now until the foreseeable future. So the thing that excited Bitcoiners from 2009 to the present is going to get even worse from now until the next decade. And so people can have a lot more confidence thinking, okay, well, are we really reached the top of 70,000 or 100,000? No. The debt load has gotten exponentially larger. You need to repay the old debt, and you have to issue even more debt because the economy is addicted to this debt. You need to generate the GDP growth to stay in office. And that is why I believe real yields will stay negative from now into the foreseeable future. And so Bitcoin and Ether and Solana, whatever the fuck crypto that you own, that you've made money on from 2002 until the present, that was just the starter plate. We're now moving into the main course, where people globally start to recognize, oh, why do I own these bonds? There's no reason for a politician to stop spending money if the central bank is stomping on rates and making sure that they can do this at a profitable way from now until the foreseeable future. Now, that is why, Bitcoin 100,000, Bitcoin 250, 500,000, whatever it is that the price target you have, get imaginative. It's going to get crazy. This is just, the beginning. People are not really believing that this is real. This is, is a bull market really here? I don't know. Maybe I should, sell out. I made a 50% or 100%, whatever it is. But, why did you buy it in the first place? If that has not changed, and that same scenario is going to continue, but in a bigger fashion in the future, why the fuck are you selling anything? Sell when you believe that an administration, wherever you're from, or globally, we're going to elect people who are going to balance the budget, who are not going to spend money to get reelected. They're going to get reelected by bringing real growth, by putting in policies that actually deliver things that we want, not by just printing a bunch of money. So that's why you're not bullish enough. Trust your instinct. You got in this for a reason. And that reason is still valid today. It's going to be more valid tomorrow. Now, before I leave stage, I wanted to drive home this point a little bit more. With respect to the incoming US election in November, which obviously is very important for global policy on a monetary front. Now, put yourself in, slow Joe Biden's shoes, right? A lot of stuff's not going so well, but the economy is growing for certain folks. And you know these statistics. Your campaign manager is telling you, hey man, guess what? You better generate that growth or your ass is grass. And not only you, but your whole party that is supporting you is out of work as well. And the US is one of the most polarized political systems between the Democrats and the Republicans since the mid-19th century. So it behooves you as the party in power to make sure you can generate growth. And it's very easy to do so if all you have to do is spend money as the government, and people feel wealthier. And keeping the real yields negative, just call up Janet Yellen and Jay Powell and be like, do your fucking job. Make sure my debt is cheap so that I can stay in office. And now, whether it's Trump, whether it's Biden, doesn't matter which one of these clowns wins, the same thing is going to continue. Here is an estimation of the budget deficit of a Trump administration versus a Biden administration from now until the end of the decade. And what do you see? Basically the same thing. They're both going to print money to do what their constituents want. On the Trump side, he's proposing more tax cuts. That's going to be inflationary. That's going to increase the federal deficit. Biden has all of his green policies. And so it doesn't really matter who wins. No one's campaigning saying, hey, I'm going to balance the budget. I'm going to be like Milei in Argentina and start slashing government ministries so they make sure that we have a balanced budget. They're not campaigning on this. So you can be confident that the setters of monetary policy are going to be under even more stress to make sure to print the money, to buy the bonds, to keep real yields negative. And what is the exit? We know what the exit is. It's fucking Bitcoin. Thank you, everyone.